Okay, so today I'm here with Christine DePaepe, who I've known, oh my God, 8 years? Eight
Yep.
years. And Christine is the renovation queen. Yes, I do not do renovation loans. I tell everyone you need to work with a specialist. Christine is that specialist. This is all she does all day long. How many states are you in now?
43 states that I can work in.
43 states of construction loans. So I thought it would be fun. I don't know that much about construction because I haven't done it in 12 years. So I'm just going to ask you a bunch of questions that I think people have.
Sure.
First of all, there's FHA construction loans and conventional construction loans. And these aren't built from scratch. These are renovation, right? So
Yes.
when would you use each type of loan?
No, that's a great question. And how I present that is going to depend on the borrower. So when someone calls in, let's say they're doing, they want to do renovation and they don't have a high credit score. In that
Okay.
case, we're probably going to look at the FHA because FHA allows a credit score down to 600. Whereas conventional, I can't seem to get them through unless we're over 680. So the first
Okay.
factor would be probably credit score, Jen.
Mhm.
Also can be the property type. So for FHA, single family 2, 3, and 4 units has the lowest down payment. So if that would fit their needs better, they want a lower down payment and they're buying a multi-unit property, for example, we may look at FHA versus conventional and offer them both opportunities.
Okay, let me ask you a question because I know that I've got a lot of investors that are watching that will be like, wait a second, you can do a renovation on an FHA 2, 3, or 4 unit, of course, with the borrower living in one unit.
That's the caveat. The borrower has to live in a unit. But if you're a younger investor and you're willing to move in it, you have to only live there for a year. So, Jen, I've done that for a lot of my clients. They're, younger people, they are like, no problem, but they want to start investing, but they don't have 30% down, or 25% down. So I'm like, well, can you live there for a year? If they can. I just had a young guy, he's like 30 years old. He bought a 4-unit, 3.5% down.
Wow.
He's going to renovate all the units to increase the rent. He's going to live there for a year. After the construction's done, he has to live there 1 year. And when he does, then he can move out. He has met the program requirement.
Okay, now I'm going to ask you a question, which might be like, and you can smack me down at any point because I get into the underwriting weeds. So can you use, I would assume that you can't use projected rental income to qualify if they're doing renovation on a multi-unit because those units aren't going to be occupied for a while. So if the borrower can't swing that payment on their own, they could be in trouble. Is that accurate, or how is it case by case?
Not accurate. So that's okay. A couple of things. So first things, big thing that happens with FHA is self-sufficiency. And what that means to all the people listening is that when you do a 3 or 4 unit property, the total market rents, not current rents. And that's important because if you're buying a building where they've had long-term tenants, a lot of time landlords don't raise the rent as much. They might do a 1% or no increase because they're happy they have great paying people. So what I find often is that I'm getting people buying buildings and the rents are under market, and that doesn't pass self-sufficiency, but I don't have to use those rents. And that's critical. I get to use market rents based on the renovations that are going to be done, which is critical.
Wow.
So underwriting will also use those market rents for income calculation. We can use, depending, 50% to 75% of market rent. There's some factors on that, but we can use the market rents for that and for self-sufficiency. During construction, if the appraised value supports it, we can roll in up to 6 mortgage payments to help so there's not a financial hardship.
What?
Yeah.
Seriously?
Yes.
Okay, I'm like impressed by that and kind of scared because, okay, so you can roll in up to 6 payments because they're looking at it saying, like the construction is going to take this long. Once they get tenants, it's fine.
Well, yeah, and it has to be uninhabitable. Don't misconstrue that. You can move in a month, and if it's not habitable because you have to do like new kitchens, new bathrooms, drywall, flooring, stuff like that. for however many months that we determine it's uninhabitable. Like if it's 4 months, then I can roll in 4 payments. If it's, 5, 6, etc. So if it's move-in ready and you're just doing like exterior work, like roof and, like landscaping, then no, there won't be any payments like available, but there would be tenants living in there, or you'd get tenants in.
Okay, so as we started talking about this, at first I was just going to ask you about basic renovation, but like I think there's so much interesting stuff with, owner occupied / investment, and also the investment aspect on this. So part
pure investment, though, we got to really clarify that is not allowed. Like if you're like, I have no intention of living there
for FHA, right?
FHA, or actually now our conventional program does not, we don't allow investment.
Okay. So really with renovation right now, if you can do like a 3 or 4 unit. Can you do a 3 or 4 unit with conventional, or is it really just going to be FHA?
No, you can do it actually with conventional as well. The down payments are higher, but the benefit of that, if you do have a higher down payment, because I just did a gentleman and actually he bought a property for, I think it was about 1.4 million all in. So when I talk about acquisition, I'm talking purchase price plus repair. So he did $1 million purchase, 400,000 update, and then he put 20% down. That's our conventional program. What's the benefit of that? No upfront mortgage insurance, which is very expensive.
Yeah.
And no monthly mortgage insurance, which is extremely expensive on the higher loan point. So yes, we can do multi-units on conventional, just as a higher down payment.
But you have to occupy a unit. I'm going to say that 900 times.
For 1 year.
Okay. For 1 year after construction.
Correct.
Okay. Now, a lot of people assume, so let's move away from the multi-units. I just think that's so interesting because house hacking is such a big deal right now. I'm kind of sad I already own a house because that sounds so amazing. I'm assuming with those, you have to stay by the conforming loan limits, correct?
Yeah. And we do high balance in like California, Hawaii, New York, Boston, and wherever your county is, each county has their own loan limits. So we can do whatever the county loan limits are, including high balance.
And the loan limits, just so you guys know, they change based on how many units. So she was talking about $1 million, which sounds like, wait, isn't that jumbo? But in certain counties across the country, a 4 unit at $1 million is considered a conforming loan. So, okay. Upfront costs, right? Let's say that I'm a 22-year-old, I'm going to buy a 4 unit, I'm going to live in a unit. How much money? And I know this varies, but
that's a great question.
For inspections?
Perfect question. Here's why. When the 22-year-old's talking about is going to go do this, they're going to have probably the parents and everyone and their brother telling them, oh, it's just an application and appraisal fee, you're fine, go ahead and do it. That is not my world. I don't just have an application and appraisal fee. That's $500, $600, $800 maybe. We start out immediately with what's called a consultant, and the consultant write-up can be somewhere between $1,000 and $2,000 on bigger projects. Now, if it's just a small cosmetic project for like 50 grand, their fee is about $800. But this is an important fee. It's paid up front.
FHA or conventional or both?
Both. It's pretty much both. The conventional will have a little bit higher fees. FHA caps them. But really, I would say most of what I do is more on the larger scale. Like if someone's buying a home and just needs to do a bathroom, I'm like, borrow off your credit card. You don't want to raise our rates are a little bit higher on renovation as well now that we're bringing that up. So really you want to get your bang for your buck, like do everything you can. But getting back to upfront fees, let's say you buy a single family home. I'm going to pivot for a minute. And, properties, there's not a lot of inventory. So you have a good school district, but it's a single family. You want to do an addition.
Right.
That addition, I'm going to need a floor plan. That means you need an architect. An architect charges for a floor plan anywhere between, I would say, $800 and $1,500. That's an upfront fee that you're going to pay along with the consultant. Let's say his fee is $1,500. So right there, you could be looking at $3,000 for the 2 people that I feel are the most important pieces, architect and consultant, because they're giving me the report that tells you how much it's going to cost. The final fee they're going to pay up front is for the appraisal and application. We're collecting about $1,000 depending. So yes, you're out $4,000 up front, Most of that's reimbursable. Though, please understand, we can reimburse for architect when the loan closes. Same with the consultant. But if the loan doesn't close because you find out, hey, the site,
Black mold.
the site doesn't support the addition because I'm on a lot that's too small. Like there can be things that come up. That's money that's part of your discovery, I call it. But 95% of our stuff closes. 5% doesn't. 5% cancel because of the report.
But you would also need an architect because I think we've all watched a lot of, HGTV, and, you walk through a place, you're like, oh, I want the bathroom over there. Wouldn't it be better if the kitchen was like this? That's all an architect. And that has to be done up front, not, I think the biggest misconception with renovation loans is people assume they're just borrowing money and they're going to get a check at the end. They don't understand.
Right.
That you have to get a consultant to look at everything. If you're planning on moving stuff, you need an architect. And then you need a bid from a contractor, right?
Right. So that's the third piece. So what happens up front is because you only have a certain amount of time to do what's called the inspection period. Normally on a normal deal, you just get a home inspector, they go in and they're quick and they, give you a report in a day. That's not how it works. We typically need a 15-day inspection period versus 5-day for a normal purchase, because we need this consultant report. He does not need the plans initially. They can go out and generate the report close enough to where you're going to get a ballpark.
So what does the consultant report look like? What is it?
Great.
What is it accomplishing? What is their purpose?
The consultant report is a 35-point report, starting with exterior, masonry. It'll go then to electric, HVAC, plumbing, interior kitchen, bathrooms. So it's a 35-point report.
So they're looking for stuff that needs to be fixed outside of what the customer wants to do, correct?
The only report that requires what the customer always gets to say what they desire. FHA will have mandatory repairs to meet what's called HUD minimum standards. Conventional does not have HUD minimum standards. Conventional, if you're missing a kitchen, obviously we have to put that back in because that's a habitability. For conventional, all they care about is habitability. And once that's met, then it's basically the consumer says whatever you want. Versus FHA, they are concerned about health and safety hazards. Like if your window is broken, if you have a crack in the window, they want the window repaired. A small crack in a window for conventional, they're not going to call that out. So HUD minimum standards, we always see peeling paint, in bad weather areas. If your garage has peeling paint, my conventional loan program doesn't care about peeling paint. FHA needs it remediated. So that's why there's a consultant to kind of help the borrower, number one, determine the scope and the cost of the work. Because HGTV, you can do a full rehab in a month and it's $10,000. That's not reality, right? And it's funny you mentioned HGTV. I'm actually doing a renovation loan for a consumer in New York, and they are in filming right now. So
for HGTV?
For HGTV. It's a refinance. It is a $750,000 rehab project. So, it's real. I mean, people are really wanting to update their homes, especially when the pandemic hit. You're in your home all day now, you want updates. So we're doing a lot of refinances right now, and that can be used for purchase or refinance, which we didn't discuss that. The program's available if you own your own home and want to do, a project and update it. Like this woman has this home and they're doing, it's a massive project. Obviously 750,000 is one of the bigger ones we would see.
Are you going to sneak on the show?
It's in New York. I don't know that I'll sneak on the show, but they're sending me lots of pictures and video and stuff. So it'll be pretty fun and we'll document it.
Okay. I feel like maybe, as you're heading to President's Club this year, just do a stop in New York, put on a tool belt. You can be the new Ty. You'll be like, I do loans. And then I don't know if you guys can see in the background, Christine is actually renovating her own house right now.
That's our new room we're adding. I'm actually it's a second home in Indiana, and the project cost is around $200,000 for the update. So purchased the home and then got $200,000 for repair. And for second home, I put down 20%. You can put down 10%, but basically there was a
wait. I'm sorry. You got to stop. you can do a second home conventional okay, because guys, you can't do second homes with FHA. FHA is owner occupied only, but you can do a second home renovation loan with 10% down.
Yes.
Wow, that's crazy.
Right. So I did 20% because I didn't want the PMI.
Yeah.
And basically we're doing like exterior, all new concrete to set up like, hot tub and a fire pit, just second home kind of fun stuff.
Yeah.
Basement, we're adding a bedroom.
Wait, you can do it for landscaping?
Yes.
Like fire pits?
Yes. Unconventional.
Wow. Okay. Can you do a pool with conventional or no?
Yeah. So I do a lot of work in Arizona and Florida. So I just closed 3 loans in Florida, all doing pools, and they're running anywhere from 65,000 to 95,000, depending on what they're doing.
Yeah.
So on conventional only, you can do, because it's a built-in pool and like hot tub spa. So yes, that's allowable. I'm
thinking of all these projects I want to do and disqualifying myself because I know like what.
Right.
I'm in jumbo because of California. That's amazing though. So you could literally use a renovation loan for a fire pit, pool, and everyone, you need to understand that renovation loans are not going to be those beautiful interest rates for a rate and term refi. It's going to be higher, but if you're financing a pool through a pool company, it's going to be a bill, not cheap usually.
So let me explain that because that's great. The woman who called me about the pool was offered 13.99% on a 5-year loan, which the payment was astronomical. For $80,000, it's really high. She was at 3.25% on her current rate, and I said, "Well, our rate's a little higher." We ended up at 3.625, but her loan was $200,000, and we added $100,000. When you did the difference, she saved, thousands of dollars on that, and she couldn't afford the pool anyway with the 5-year repayment. It was just really, really high. So to spread it out over 30 years was amazing. And it adds a lot of value because the property's in Florida.
Well, and if rates stay low, which, I don't really think they're going to unless our economy goes in a trash can, let's pray it doesn't get worse. But if rates stayed low, after she finishes construction, she could always do a rate and term refi, right?
She could. Florida's pretty expensive. So she bought down the rate. She's pretty happy. I don't know that she would because it depends.
But like Ohio's
super cheap. Indiana's very inexpensive for rate and term. Chicago's inexpensive for rate and term.
Mm-hmm.
But like New York is more expensive.
Oh yeah, New York, Florida.
Florida's expensive, but definitely I would say 80% of all my renovation loans are refinanced when the renovation's done. Number one, reducing PMI, reducing rate, sometimes PMI getting removed because there's adding so much value. That is absolutely correct.
Okay. And then there was a question that just kept on popping in my head. I thought it was good. Oh, okay. Renovation with purchases. So what I say to clients, and you can correct me, is, depending on the market, if the market's not moving as fast, renovation can be great, but you can't close a renovation loan in under 30 days, unless it's a small one, no matter how amazing the loan officer team, because your team's been doing renovation.
We've been together, my whole entire team. We've been together 6 years, but I've been doing reno for like 13 years. Half of my team's been with me that time. The other half has been 6 years. It's a very specialized thing.
Yeah.
And we can't close in 30 days, even if it's a small one, Jen. It's impossible, not because of us, because of the appraisal turn times.
Well, isn't it also, we've got to get the contractor to put together a bid. And like I renovated my house, getting a bid from a contractor is incredibly difficult.
That's the biggest piece is when it goes well is when they already have a contractor lined up or family members, a contractor, really having a contractor lined up is really important. And that's going to be the key to success. These take about 60 days to close. If you can't get that amount of time, what we've been doing, Jen, because I've had 4 of them just close, they're buying it without the reno, just getting it closed.
So it has to be an average or better condition, everybody, you can't buy.
Average condition's fine, as long as it's habitable. But, like we had an estate sale. The woman hadn't updated the home in 30 years. It was a C4. That's a condition for people out there. Conditions go from C1 to C6. As long as it's a C4 or better, we're fine. It was a C4. They closed in like 25 days because they had to. And then we started a renovation loan which then from there, they got to be in the house more and see what they needed to do. We closed it about 90 days later, just because the consumer wanted to really make sure how they wanted the design. But the great part was they got the home, and then we refinanced into renovation. The negative is they paid 2 sets of closing costs, but they didn't care. They didn't want to lose the location of the home. It was in a good school district.
And what's interesting, like I was just thinking about that, like from a listing agent, like my mom's going to be selling her house soon and it hasn't been updated. And, you know, she's not going to get probably the highest price because of that. Whereas if her agent's open to a renovation, she may get a higher price for the house, because if your house isn't in great condition, you know, you're going to be looking for those speed offers. So I think there's an opportunity there for listing agents. I got to think that one through.
Yeah. And I want to add to that. Some agents don't know about the program. They walk into a property like, oh, this will never sell. And they'll just like price it low, not get, for example, your mom the money she could get.
Yeah.
Whereas if you knew about the program and you're like, wow, if she just put $100,000 into this, it'd be worth, let's just say 800, but they're going to list it for 600 because they don't know better and they just want to get it off. Where you could then maybe get 650, market it as a renovation loan, say that there's 100,000 available, because consumers coming in don't know they can do that, don't know that there's money available. This is definitely something listing agents are not in tune with and don't know enough about, because instead of getting a cash offer, which won't bring as much money for, say, you can get a financed offer, which would bring more money. And you're educating the realtor, bringing in the client. The consumer then can do the home their own. And why I bring that up, we had a list agent who's like, oh, my client's going to finish it. We won't market it as rental. They're going to do it themselves. Well, they picked out these horrifying cabinets and nobody wanted to buy it. So what they should have done is really marketed it as reno. So the consumer, they didn't sell the house for like over 5 months because of the cabinets. They were
what color were they? What was wrong with them?
Off yellow. That was in about 7 years ago. It's just what they liked. And you got to think about that when you're selling your home. Not
off yellow?
Like an off yellow? I don't know if you've heard of that. I don't know. It's just
no, that must be a Midwestern thing.
Actually, it's not. So that's why it didn't sell. But my point is, you know, if you have all these, you know, places that are sometimes marketing, oh, fix it up before you sell, you get more money. But if you're fixing it up and it's not what the consumer likes, that could be a mistake. People like to pick their own finishes and pick their own stuff.
You know, what's interesting too, is there's a lot of people that are super worried about selling their house and then finding another house. Whereas if they were open to renovation, right, that gives them a good cushion to find another house while their house is still in escrow.
Right.
So that's another angle. Okay. I know, because I don't want to keep you too long because you've got workers in your house, but I've got a couple more questions. If you own a house, okay, renovation, what would your top 3 tips be for people, what they should do before they even call you, or do they just call you first if they're just thinking about it?
Honestly, we ask them to call us first. Here's why. A lot of times they can't like understand the cost. You know, they're like, I want to do this, but I don't understand. Can I afford it? That's where we get a consultant out right away. And let's say the fee is $1,000. You're going to get a report that's going to say everything you want to do, broken out by labor and material. And then you could be like, okay, I wanted to spend 100. This is 120, but then I'll just cut out one of the bathrooms I was going to do. Like, it helps you identify that you can do it. And then you have the report. And why the report helps is then that's really the whole scope of work. And it's easier for you to bring that to the contractor, because you're saying the contractors are hard to get bid. Well, everything's written down. Okay.
Are the contractor prices similar to what the consultants are coming up with?
Yes. Okay. Yes, definitely. I mean, sometimes we'll get a bid that's outrageous and we're like, no, because they're just overcharging the client and they just got to go back to square one. But most of the time they're pretty much right on, you know, so it works out well because it gives the consumer an idea of what they're going to spend. And then I can properly pre-approve them and say, you're good. From there, then they can go get an architect and get a contractor. We kind of lay the foundation and help them.
Yeah, and you'd be making sure before they even pay for the consultant that their debt to income is going to work, the
Yes.
credit's going to meet the
Yeah.
parameters.
When
Okay.
they tell me what they're trying to do, I can, just by doing this so long, I'll be like, okay, we're going to use 150, 150,000
Yeah.
at a time. So yes, I will do a range, and I pre-approve them like no other. I mean, I don't just take the app and go by what they say. We
Of course.
require documents because they're going to be putting out money, and we can't make that type of mistake. Some borrowers get frustrated with that. They're like, just tell, I told you what my income is. And I'm like, no, because then if you pay for something and then we come back and tell you you're not approved, you're going to want your money back and I can't give it to you.
You don't need to worry about that with anyone that watches this stuff. They've dealt with my videos so much where I'm like, I will not do anything without your documents.
Right.
I will not look at your file. I will not breathe without your documents, because the online apps are 90% wrong because underwriting's so nichey. So I agree with you on that. Okay.
Thanks
now
for
for
that
people,
message.
for house hackers, or, someone who wants to buy their first house and have it be, maybe they want to buy a house and fix it up and live in it for a while, or they want to do, multi-units, should they be identifying a contractor? Because what I worry about is if they get into contract and they don't even know what contractor they're considering using, like, I just worry about the time.
Yes.
Maybe it's just a California thing.
No, it's not. I think that's going to be the biggest challenge, is that they should identify a contractor. Like, because when you call contractors, if they're 6 months out, that's actually not bad for us, because your closing is going to take 60 days. And then usually getting permits can take a month. Even though you got to wait 3 more months for them to start, that's okay. But they do need to identify a contractor. I think if you go into a 4-unit building that might need, 50,000 units, you need 200 grand. If you don't have a contractor identified and you're in contract, that is not a good thing. You definitely should call some people, like, would you be willing to bid out? This is what I'm trying to do. Definitely. And we help them with that. Like, they can check like Angie's List, their realtor can refer them. The Chamber of Commerce might have some contract. It's a process to try to find the contractor. Sure.
Yeah. And you guys need to understand that as lenders, we do not refer contractors. Yep. We stay the heck away from it. And contractors, I don't want to say it's a band of pirates, but maybe that's just been my experience. You really have to do research. Just because your friend's friend used someone, you need to look for reviews. You need to look because, it can be a little wild.
And while we validate them, people think that means they're never going to have a problem. And that's not true. And why I say that is, some red flags are when GCs change their business names a lot.
Oh, wow.
That's a red flag, because they might be like, okay, I did this as, John Doe Inc. Now I'm going to go to Jim Doe Inc. And so the bad reviews for John Doe Inc. Now you're Jim Doe Inc. So we can see if they've changed their names a lot. And if it is, that's a huge red flag for us. I'm just saying that is a little bit of a protective thing with this loan too, is, we're using our money versus you using your money. So there's a little bit of protection on the client, because like my son's speech therapist had her own money and was doing reno before I met her. And she gave the guy 35,000, checked reviews. Well, he was the guy who changes his name, right? And he got with her money. He did it to multiple people. So I don't know that she'll ever recover anything. And I know
she won't.
Right. I mean, yes, obviously the state's attorney went at them, but the point is, if it's our money and we pay them, then it's our problem. So we are very careful with how much we'll pay. That's why we do all these background checks. We check for lawsuits, litigation, company name changes we can see. And if we see them, we go see those. So there's a little bit more protection on this type of loan too, versus paying yourself.
Oh yeah. Cause you guys, so once the loan closes, you're only giving out money in draws as they complete the work, correct?
They get some material draw up front though. That is the one tiny risk, but they do have to show. We've tried to vet them. We do our best. Can I say that 100% of these loans is not a problem? No, but it's not your client's problem. If we give money and they disappear, that's our problem. You know what I mean?
Yeah. I had a contractor, you'll love this. So he used to show up on my doorstep and he'd be like, Jen, Jen, I need 20K. And I'm like, I gave you 30 grand last week. Like, what the hell do you need the money for? He's like, I can't pay my guys. And I'm like, but you're working on other houses. Like, but he would come and show up on my doorstep and basically extort money out of me, you know, and we were in the middle of a project. We had no choice. Like we ended up like basically me threatening to sue him if he didn't get off the property. And, you know, 2 years later, I just had to have a big chunk of the house rewired because there were live wires in the attic.
Yeah. No, I mean, it's definitely, you know, we always say, try to get a referral to the GC. Like you said, like if you know someone who's used them and that, you know, I mean, I do all over the, you know, the country. So, you know, I have a woman in Ohio, she's using a neighbor. She's like, I've seen his work, you know, like she knows it's good. You know, I'm from the Chicago area, so our consultant will have names, which helps. Sometimes consultants may give a name, sometimes they don't, because it just depends. But again, I think your best, you know, bet is like Chamber of Commerce, word of mouth, Facebook, you know, your family, your local community, your your chamber. There's ways to find them. You just have to, you know, pound the phones a little bit. But the program's phenomenal. I mean, I can't say enough about the past year, how when COVID hit, you know, we were all wondering what was going to happen. It took off in my platform just because of people being in their home and finally realizing, okay, I have one bathroom. Like this doesn't work for me now that we're all at home, you know? So
no, I mean, the second home renovation thing is so like from where I'm sitting, I'm like, that's so amazing. You know, in California, there's all these cottages in Tahoe that are like just need love, but you spend so much money getting in. And then, you know, if you can do this with 4 units or even putting in the pool on, I mean, I didn't realize the opportunity because I don't specialize in it, but you do.
So let me refresh what we do. Primary residence, which is a condo, townhome, single family, 2, 3, or 4 family properties on either program. FHA does not do second home, but FHA does mixed use, which we haven't even mentioned. You can do mixed use with 3.5% down. If you have a commercial space, like let's say a State Farm office and then a residence above, you have to live in the residence above for a year, but you could literally buy a commercial property with 3.5% down.
Oh my God. It's like a whole world.
It is definitely a new world. But again, if people need more information, obviously they can call you for you to take the initial application, and then you and I work together and you would say, hey, Chris,
I'm going to put your email and phone number. They don't need to go through me to get to you. So your email is chrisd@rate.com. And then why don't you just give out your phone number so they can call you and answer questions.
Yeah. And best way to get me is obviously via text because I see it quicker. So my cell number is 773-848-4144. And again, the email is Chris, CHRISD, like David, @rate.com.
Okay, so if you guys have questions or anything else, feel free to put them in the comments. We need to do this again. There's so much. I mean, you've opened up my eyes, but I know I'm going to hang up on this and I'm going to be like, oh my God, what else, you know, did we not do? So I appreciate you coming on because people have been asking about renovation nonstop. So again, we're going to have to do this again.
Yeah, and there's no dumb question. That's one thing, Jen. And we do actually renovation webinars every 2 weeks. Myself and a local consultant, where people could just sign up if they want to listen to more about the program. Our next one's August 24th as well, just so you know.
Okay. Do you have well, let's get a link for that because maybe I can put that in the comments. And then if people want to sign up, they can click on the link.
Yeah, I'll send you a link for that. It's an invite or something.
Okay. I appreciate you. Thanks, I'll see you in a month if I don't see you sooner on this. Okay.
Looking forward to it. Have a great day. Bye. Thanks, everyone. Bye-bye.